Hi guys, and welcome to our podcast. Today we're going to discuss the questions you should ask your mortgage lender before taking any decisions regarding your mortgage. More than one half of mortgage debtors get their loans through agents. The primary gain of the use of a mortgage dealer, instead of going through a bank, is that the dealer can save amongst numerous creditors to find the exceptional deal. Many mortgage brokers are small groups. Borrowers regularly sense, whether justified or not, that they could trust huge lenders along with Wells Fargo, Washington Mutual, and Citigroup, but they're regularly not as confident about small call brokers with paltry marketing budgets. With the intention to offer you with accurate facts, your loan mortgage officer requires discovering about you. Do not be afraid to proportion all of your private statistics, which include giving permission for the lender to run your credit score file. Do not forget, the extra your lender knows about you, the better recommendation and help you'll receive. After you've interviewed a couple of mortgage creditors and vetted your lender to make sure they're authentic, explain your economic scenario. What's your month-to-month profits? What are your other big monthly expenses? And what are you able to afford as a down payment? Loan lenders will respect your hard work for your cash, and you need to spend it wisely. After running a credit score test, your lender will present you with alternatives for what you can qualify to borrow. The mortgage amount may be unique, relying on two things: the product and interest charge. Because the interest fee determines what you'll owe each month, and on that balance, know how one-of-a-kind loan products work is key. Here are 10 queries to ask to make sure you're getting the best rate, and a pleasant deal. First, what is the interest rate and annual percentage rate, APR? Your lender will provide you with an interest fee primarily based on the loan and your credit. The interest rate, along with the mortgage balance and loan term, will decide your actual month-to-month charge. A mortgage with a decreased balance or a decreased interest rate will make for a smaller month-to-month charge. In case you're now not glad with the interest rates offered, work to ease up your credit so that you can qualify for a decreased interest fee. The once-a-year percent rate, APR, is derived by using a complex calculation that consists of the interest fee and all of the other related lender fees divided with the aid of the loan's time period. But endure in mind that few lenders do not compute APR effectively. There's no way to accurately compute an APR price for an adjustable mortgage, and an APR does not account for early payoffs. The second question you should ask is, how much can I afford? Commonly, people pick their homes earlier than they select the financing. However, it should be the alternative way around, Irwin says. She advises determining you may have enough money before delving into your own home search. Normally, your total housing costs, inclusive of mortgage foremost and the interest payments and heating and housing taxes, need not exceed 32% of your gross month-to-month earnings. Your general debt loan, including your property fees and other debts inclusive of credit cards and automobile loans, shouldn't exceed 40% according to your gross month-to-month income. A mortgage dealer looks at your modern sources of earnings and credit report to help you determine what sort of home you can come up with for the money. A mortgage dealer looks at your home sources of earnings and credit report to help you determine what sort of home you can come up with the money for. Another important question is, what type of mortgage should I consider? Fixed-rate loans hold the same rate for lifestyles of the loan, which could vary among 10 and 30 years. Adjustable-rate mortgages, or ARMs, have interest rates that alternate after an initial length at ordinary intervals. If you don't plan to live in your private home for a long time period, a hybrid ARM with a preliminary fixed fee period can be a better desire, on account that this type of mortgage has a tendency to have lower interest costs than constant fee mortgages. In case you do remember an ARM, make certain you ask and apprehend while the charge will alternate and by means of how a good deal. Ask how regularly the rate will trade after the preliminary interest rate exchange, the index that it's tied to, and the mortgage's margin. There are usually caps to how a lot of the interest fee can increase in the course of one length and over the lifestyles of the. Another something you should know is what are the fees you have to pay and what are the discounts. One-time charges, commonly known as points, are due at closing. For every factor you pay, your lender will decrease your interest fee by means of 1%. You may additionally inquire approximately whether you may have the choice of paying zero final fees and trade for a better interest rate. Every point is equal to 1% of the loan quantity. Consequently, 2 points on a $10,000 loan fee cost $200. Every now and then, lenders charge origination costs in addition to points. Points buy down the interest fee. That means more points you pay, the lower the interest price. Points are also tax deductible. even though the seller will pay some or all of the factors. Another aspect is how exactly the lender handles rate locks. A few brokers gamble with fee locks. You inform the dealer to fasten a surcharge on a date, and the broker tells you over the telephone that your rate is locked. Secretly, the broker would not lock the charge, hoping that prices will drop earlier than your last day. If costs drop, even supposing they dip for only a day, the broker can lock at that decreased rate. You pay the higher rate that you locked at. The dealer can make an earning at the distinction. If the rate doesn't drop, and rather increases, the broker may let you know that there was a glitch in your documentation or that the mortgage process was in any other case delayed, and that it's impossible to close your mortgage earlier than your price lock expires. Or the broker would possibly inform you that you are improper and that you never surely did lock your charge. The most secure manner to head is to ask your broker for a mortgage commitment letter from the lender. It must have the lender's call and specify the interest fee, the date, and the rate became locked, and when the lock expires. The last common question to ask related to the minimum down payment for the loan. Extraordinary mortgage products have one-of-a-kind down fee necessities. Maximum mortgages require a 20% down payment, but in case you qualify for an FHA loan, as an instance, your down payment will be as low as 3.5%. In standard, loans with lower down payments price greater. There are a couple of other relevant questions you can ask. For example, do I have to pay for mortgage insurance, and how much will it cost? Placing down less than 20% to your buy calls for paying mortgage insurance till your loan to value, or LTV, ratio falls below 80%. Mortgage coverage charges can be pricey, once in a while costing up to $100 consistent per month for every $100,000 borrowed. In addition, try to understand your prepayment penalty. In a few states, prepayment consequences are no longer allowed, so ask. Usually, prepayment penalties let the lender acquire a further 6 months of unearned interest. If you pay the loan off early through a refinance of sale of the assets, be sure to ask, what are the terms of the prepay? A few are an impact simply throughout the first 2 to 5 years of the loan. Would the prepayment penalty observe if I refinance through you at a later date? How much time do you need to fund? Average mortgage processing time intervals fall between 21 and 45 days. To properly write a purchase agreement, you will need to consist of a last date, and that date has to be coordinated along with your lender. Find out, what is your anticipated turnaround time? What barriers may want to likely preserve up remaining? How long after very last application approval will the mortgage fund? Summary. Preferably, you observe the dealer through a reference from a pal, relative, or coworker. However, in case you selected a dealer through another criterion, maybe you pressured beyond the broker's office each day, otherwise you answered to a direct mail commercial, you could request references. Ask for the names and contact information for the maximum of recent 2 or 3 customers who closed their loans. Then follow up by means of calling them. Ask in the event that they were dealt with good faith estimate of last prices were accurate. Specifically, ask if they would do business with the dealer once more. You would possibly find yourself talking to a borrower who already is a repeat customer, someone who was given the original loan through the broker, then refinanced through the same broker. That's a great sign. That's it for now. On our website you can find more posts as well as mortgage calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. We would love to know the questions you ask your mortgage brokers, so feel free to share them in the comments below.